As you all know, I am not a broker and I am not an investment banker or anything like that or a planner. So this is all just how I choose and pick stocks. Thanks. Hi, group. So I got a request for what the basics are about investing. So we want to start from scratch, the very, very smallest tidbit of information that you would need to get into investing. So the first thing everyone should know is you have to open a brokerage account. So it doesn't matter who you open the brokerage account with. It could be Schwab, it could be Robinhood, which is one of the platforms I use. It could be Stash. The basic thing you need to look for in your brokerage is how much is it going to cost you to perform trades. For every trade you make, the brokerage is going to take a commission. Now, depending on which brokerage you go for, the commission can be taken into different ways. So for Robinhood, they allow you to trade for free, and I say for free in quotations because I do notice that sometimes it's 1 penny more or 1 penny less if you don't do a limit order. If you just do a market order, it might be a little bit more or a little bit less. Now, if you do limit orders, then yeah, I guess I could consider that for mostly free. If you trade options on Robinhood, I do notice that they charge you like a penny or two per trade. So there is a little cost in there. It's a hidden cost, but it's there, and I can tell it's there, but I don't mind because it's such a small cost. If you trade cryptocurrencies on Robinhood, yes, they do charge you. It is like 1% or somewhere around there when you make the trade. It doesn't show up as a commission, but they just basically put you in the market for like 1% above what it is at the time of trading. Now, for a company such as Schwab, I also have an account with Schwab. I have like 3 brokerage accounts because I'm such a finicky trader and I like to actively trade. I also want to make sure I have that backup. That's the buy and hold trades. And then I want the willy-nilly, I'm just, picking stuff trades. So I have 3 accounts. I have one for every mood because, Chantel has several moods to her. So if you're like me, there's no penalty in having several brokerage accounts. You can have as many as you want as long as you keep track of them. So they normally don't charge monthly fees. Stash does. Stash charges a monthly fee. So for under $5,000, it's $1 a month. But they also give away free stock, so it's like it balances out for me. That's another thing I like about Stash. So the very first thing you need to do is open your brokerage account. And it's very easy on Robinhood. That's the one I'm going to stick with for this video. You just got to, sign up, download the app, and then you take a photo of your ID, and they just want to make sure you are who you say you are. And for tax purposes, you do need to share your social security number because obviously you have to report your gains and your losses on your taxes. So it takes about 1 day for them to verify you if it's a weekday. And then once you're verified, you start out at a 0. Unless you lie and say that you're like the best stock trader in the world, they'll start you off at a 3. But what you do want is to start off at a 0. And from there, that means that they only let you do certain things at a 0. At a 0, you can only buy stock with money in your account. And this is very important. If they offer you the option to do number 2 or number 3 or number 1, say no and just start at 0 because, hey, you're novices and you're just starting out possibly. So start at a 0 so you can't accidentally make a mistake. You don't want to accidentally do something and find out, oh my gosh, I'm in the hole $30,000. Or you might think you're in the hole $30,000, but you're really not because you don't understand what you're doing. So start at a 0. And basically, you'll be able to buy and sell stock at a 0. That's all you'll be able to do, buy and sell stock with the money that's in your account. You can't buy on margin, you can't borrow money, and that's exactly what we want to do. We want to keep you from doing any of that extra stuff for now. So once you got your brokerage account open, what's next? You got to deposit your money in there. The money that you deposit into the Robinhood account will gain 0 interest. There's no interest bearing on these accounts. Okay. So the only way you're going to make money is by investing or putting the money into the market. So that's step 2 of our crumbs today. So now that we got the account all open and we're ready to start, we put the money into the account and we're ready to start investing. Now it takes 3 days for your money to settle. What that means is when your bank transfers over, they will possibly give you $1,000 advance on your money. So as your money's transferring over, you can go ahead and immediately start trading, and you get up to $1,000. And then after that, if your money is in the account and you are ready to trade, you can go ahead and do that. Now they'll let you trade in advance. So if that money really isn't in that bank account, you got a problem, because you'll make the trades and then all of a sudden everything will go left because the money really wasn't there. They'll draw the money back. So make sure that money is in the account before you start these trades, because you only get 3 days. So after the 3 days and the money is actually settled, everything's all good. They'll send you a little notification. It's great. So basically, first lesson is make sure the money's actually in your bank account when you transfer that money to Robinhood. Okay? Don't be trying to buy on margin, hoping that in those 3 days you make money, because they still want their money at the end. So after you have the money in your account, the next thing we're going to do is we are going to look for what we want to buy. And how do I look for what I want to buy? So we're just buying and selling stocks. And for this, we're just making a plan on purchasing blue chip stocks. What is a blue chip stock? Because you're just beginning. We don't want to buy anything that's going to be very speculative. We don't want to speculate. We know that Apple is a great company. We know that Apple pays a dividend. We know that Apple has had a long history of going up. We know that Apple is not going to go bankrupt tomorrow. That is what a blue chip is. So you want to think about other blue chips. There's Microsoft. They're not going anywhere. Google. They're not going anywhere. But some of these growth stocks, okay, let's back it up. So there's growth stocks that grow a lot, like Tesla and Amazon. Oh yeah, that's another growth stock. And I call them just growth stocks because they don't pay dividends. All they do is grow. So you just make money by owning those stocks. So if you own Amazon, you own 2 shares of Amazon and Amazon price goes up, that means your money is getting bigger. Um, how do you make money in the stock market? That might be a question, because a lot of people don't understand how they make money in the stock market. And I'm going to give you an example. So you're going to buy today Apple. So we buy Apple today. Apple is at a price of $131 per share. You paid $131.76 for 1 share of Apple, because that's expensive. 1 share of Apple, right? And let's say 5 years from now, Apple is worth $300 a share. Yeah, that'd be incredible. So let's say Apple's worth $300 a share in 1 year, right? But you paid $131.76 per share. That means you would have made $168.24 by investing in Apple for that 1 share. Now just imagine if you could have bought 5 shares of Apple at $131. So we'll just multiply that by the 5 shares. You would have made $841.20 if you sell Apple after 1 year. So hopefully that makes sense. Now, what comes along with this? As you purchase Apple at $131.76, and you hold on to Apple for 10 years, and Apple goes $400 and $500 and $600 a share. If that happens in 10 years, you would have paid no taxes on those gains, because you do not pay taxes until you sell. But in 10 years, when you sell that stock and you've made your riches, that is exactly when you pay taxes on that. And that is called a capital gains. So just keep that in mind. If every time you sell a stock, you have to pay taxes called capital gains on that stock. Yeah, it's not fun. So depending on your tax bracket, you could be paying a lot, or you can be paying a little, like me, because I don't make that much money. So keep that in mind. But that is how you make money in the stock market. The second question I got, I'll create another video for. And the second question I got was, how do I pick stocks?